How to beat 99% of investors by not even trying. Imagine a tournament. On one side, financial wizards with PhDs and billion-dollar budgets. On the other side, there's you. How could you possibly win? We're taught you have to be clever, pick the right stocks, and hire expensive managers who promise to outsmart everyone. But here's the twist. Investing is a loser's game. The winner isn't the one making brilliant moves. It's the one making the fewest mistakes. And the biggest mistake is trying to beat the market. The very act of trying the fees, the frantic trading guarantees you'll get less than the market itself. The shocking truth is, by simply buying a fund that owns the entire stock market and doing nothing, you'll outperform almost all of those geniuses. You win by refusing to play their game. What if an invisible thief could legally steal over half your retirement, and you're paying them to do it? You see a mutual fund with a 2% annual fee. Sounds tiny, right? You think, if the market returns 7% and I pay 2%, I still get 5%. Great deal. But it's not a 2% fee on what you put in. It's a 2% fee on your entire fortune, every single year. Over 50 years, that tiny fee doesn't just reduce your returns. It devours over 60% of your potential wealth. Here is the math. $10,000 growing at 7% for 50 years becomes almost $300,000. But at 5%, it's just over $100,000. You took all the risk, but the fund manager walked away with $180,000 of your money. Everyone's searching for the next Apple or Google. What if the secret to finding it was to stop looking? Fund managers sell themselves as expert needle finders, sifting through thousands of stocks to find that one magic company. But they're terrible at it. It's nearly impossible. The mind-blowing secret? You don't have to find the needle. Just buy the whole haystack. By buying a low-cost total market index fund, you own the entire market. This guarantees you will own the next Apple, the next Google, and every other world-changing company, automatically and for a fraction of the cost. While others are gambling on finding a single needle, you've captured all of them by default. You've found the perfect fund. It's beaten the market for 10 years straight. The manager's a superstar. This is your golden ticket, right? Wrong. You've just fallen for the single biggest predictor of future failure. It's called reversion to the mean. Extraordinary performance is almost always luck. The data is clear. The top performing funds of one decade are almost always the worst performers of the next. Chasing yesterday's winners is a proven strategy for buying high and selling low. The hot fund of today is the cautionary tale of tomorrow. The common sense investor ignores the hype and buys the boring market average, knowing that average is destined to beat the fleeting superstars over time. The most brilliant investment strategy is the simplest one imaginable. All these insights and more are in the Little Book of Common Sense Investing. Check out the link in the description to grab your copy. Thanks for watching.